for Economic Research, and Brandon Arnold is the Executive Vice President of the National Taxpayers Union. Good morning, gentlemen.
Morning.
Morning.
So, Peter, why are Walmart's earnings so important? We just got them, pretty mixed as to what's happening. They issued future guidance, which was not so optimistic. The CEO saying that, yes, the earnings were helped in part by some of the tax refunds, but still a bit pessimistic as to the future. So break it down for us.
Sure. So Walmart is the sort of the largest retailer that has reach across the United States. So a lot of people shop there, and we're able to find out what the wherewithal of consumers is, what they're spending on, what they're not spending on, and that's a pretty valuable thing. When you take Walmart and you put it together with things like Target and some other firms, you get an even better look. But Walmart's the first one we see, and Walmart's not only a gauge of consumer spending and discretionary spending, but also of the impact that tariffs are having, because they get so much of their inventory from China. So it's a really good and highly correlated indicator with consumer sentiment. And from what we saw this morning, consumers are still out there, they're still spending, but it does look like there's some wallet fatigue going on. And that no doubt has to do with higher gasoline prices and higher inflation in general over the last few years.
Interesting. And just for our viewers, to put Walmart into context, 60% of Americans buy their groceries from Walmart. And 90% of Americans live within 10 miles of a Walmart. So, Brandon, the thing is that when you actually look at the Walmart reach, so to speak, for everyday common essentials and necessities, how do you break this down in terms of Walmart's forward guidance, the current situation in the Middle East that's impacting energy shipments around the world, that's ultimately impacting the very people who shop at Walmart?
Yeah, absolutely. Walmart is such an important bellwether here, such an enormous retailer. And consumer spending also incredibly important, as Peter was saying, looking at other retailers as well to get a more fulsome picture of where things are. Consumer spending is more than 2/3 of our economy. So as consumer spending falls, and hopefully we're not going to see a major downturn in consumer spending here, but there are some strong headwinds with the war in Iran, tariffs, and other factors. But if consumer spending does indeed take a turn for the worse, that could have broader economic impacts than just the retail sector. That's why Walmart's earnings report is so critical in getting a better sense of what's happening in the economy right now.
Well, a bright spot in the economy, at least what we saw with NVIDIA yesterday, and what's happening, what's here to come, OpenAI and SpaceX, their IPOs are on deck right now. Both tech rivals about to drop initial public offerings. So, Peter, your thoughts on how the markets might respond, because Goldman Sachs was named the lead left as to this IPO, and they're doing great right now.
Yeah, this is a positive thing in terms of a lot of investors wanting to get onto both the AI and to the newly public sort of space sector. Right now what we're seeing happening is right now equities right now are sort of competing with treasuries. The yields are up on long-term treasuries to about 5.25%. They're in that neighborhood. What that means is that the stocks are pretty high relative to what bonds are offering in compensation. But it's new issues like this that sort of capture the imagination, and they're going to reset valuations. So there's a thought right now that many AI firms might be too overvalued. That may not be the case when we see what both OpenAI and then also SpaceX, which has the XAI component in it, fetch in the market.
Yeah, you know what? This sounds like great news, Brandon, but when you actually look at the GDP formula, we just talked about the C in terms of consumer spending. Now, with regard to AI, we see heavy business investment. That's the I. And the G is government spending. And Lord have mercy, the government has spent too much, arguably holding up this economy. And of course, net exports and imports. When you look at that formula, can you actually put this entire thing into context with regard to the consumer, government spending, and now the proliferation of AI investments, two of which is actually going public? How does this actually going for the American economy and the American consumer in the future?
Yeah, it's really interesting, because when you look at the economy, some things are very, very positive. You look broadly speaking at capital expenditures, investment in this country, and it's gone way up. But if you look a little bit closer, you see that most of those investments are taking place in AI-related industries, tech industry, chips, and so forth. That's where CapEx is really strong, and the rest of the economy is considerably weaker. So there's a lot of nuance to this economy. We already talked about consumer spending. Exports have been up. But again, you look a little bit deeper at exports. Our number one export is now non-monetary gold. We're exporting gold, not manufactured goods like you might expect, or oil in this economy. It's non-monetary gold. So there's a lot of peculiarities to this economy right now. Overall, you look at the stock market and a lot of strength there. Capital expenditures, top line, very strong. But you look a little bit deeper, and there is some cause for concern, certainly some yellow flags, if not red flags here.
Yeah, there's a big disparity what's happening on Wall Street versus Main Street. And President Trump suggesting he's in no rush, though, to make a deal with Iran right now. And let's hear that.
I'm in no hurry. You never think, oh, the midterms, I'm in a hurry. I'm in no hurry. Ideally, I'd like to see few people killed as opposed to a lot.
But he is aware of the midterms, Peter, and he's also a businessman. So I think we do have some optimism in terms of what we'll ultimately see. But right now, Americans are feeling pain at the pumps. So what does this mean for Memorial Day weekend? It's upon us, and gas prices are still sky high.
Yeah, we're entering the period of the year where we're going to use the most gas that we ever use. It's about 18 to 20 million barrels a day. Of course, prices are elevated right now. What we're seeing right now is that businesses and consumers can adapt to $85 or even $95 oil, whatever that means for gasoline. But what they struggle with is when oil is moving $5 or $10 a day and the implication on prices. I would say right now that gasoline and oil are both trading more like geopolitical prediction markets than like commodities. And for that reason, it's very hard for people to budget. And again, we're moving into the period right now where they're going to see it and feel it more than at any other time of the year.
I love the president. However, I did not like that comment. And I don't like this protracted war, Brandon, because it's having a devastating impact on the American people and potentially jobs right here in America. But it will affect, some way, somehow, the midterm elections. Arguably, the economy helped bring Trump back to the White House. But if this economy continues the way it's going, because we do know that markets, in terms of investments, investors like certainty. But guess what, Brandon? Consumers like certainty as well. And there's no certainty right now as to when this war is going to end and when prices begin to stabilize. So how would you describe how things are going quarter by quarter if you were to project from this point all the way to December 31st?
Yeah, well, let's hope that what the president is saying there is partially some signaling to Iran, hopefully bringing them to the negotiating table, because absolutely you're right here. The economic impacts are the most important, but it's hard to look at this situation without simultaneously considering the political impacts. And the price of oil, the price of gasoline is not going to fall immediately once the conflict in Iran is ended. There's going to be a delay in that. We have to bring our energy production back online, not just here in the United States where it has been humming along, but certainly more importantly in the Middle East and in other parts of the world. That's going to take months. So we're looking at less than 6 months now till November, getting this resolution taken care of as quickly as possible. Absolutely critical for calming consumer sentiment, achieving that type of certainty that our business community and consumers as well really need to get the economy back to where it ought to be. That's absolutely critical. So we really can't waste any time whatsoever if we want to get our economy back online and if we want to have a better result come November, because time is getting really tight here.
Absolutely. Dr. Peter Earle and Brandon Arnold, we appreciate you this morning and every morning that you're on.
Thanks, guys.
Thank you.
Thank you. Appreciate it.
Coming up, the final curtain call.